Welcome to AHA Math and Science. This is time for weekly summary, and it looks like a lot is happening in the market, especially the big tech names in the past week. But I want to actually share this slide with you, and this is something I want to get to at the end of this video, which is about the sentiment among individual investors. It turns out that actually the sentiment is still very bearish, and I'll talk more about that towards the end of this video. And first, I just want to thank everyone who has been watching this channel. Thank you for your support, and it's really your support that motivates me to actually make good videos and share my analysis with you. And I know that we all kind of like have our different opinions about this market, but I just hope that this video and this channel can actually give you a kind of a different perspective, so that actually help you to kind of get a more sort of different looking at the market from different angles. So, and again, thanks a lot for your support. Let's get started. So this is what actually happened to the market in I guess the last week. On Friday, every major index kind of jumped more than 1%. Well, the VIX actually declined by about 6%. For the week, it turns out that SP 500 and the Russell 2000 not really kind of move much, but the Nasdaq obviously had a crazy week, partly due to actually Nvidia which provide really kind of like topped a lot of the expectations. So that jumped more than 2%, and the VIX for the week also jumped about 7%. And what's really interesting is actually this weekly chart of SP 500. For a second week, the SP 500 closed in green, and now it's actually at a level of about a little over 4,200. Now, this level actually it's been taking quite a while. You can see that that increase was not smooth at all. And from the low of about 3,491, it's actually now more than 20%. So the 20% from this low will put us around 4,190, but we are now 4,205. So does that mean like a new bull market has kind of returned, and now we are in this new bull market territory? Well, it's certainly interesting to kind of think about this, and perhaps this kind of broke this 20% level could mean actually more kind of upside ahead. But I will talk about like what about in the intermediate term, in a few months later, what happened towards the end of this video. And last week I mentioned that about this correlation between the small caps and also the 10-year treasury yield. Actually, not necessarily small caps, but all the other index. It seems like we are kind of in these three sort of different zones. Now we're kind of back into the positive correlation zone. Whenever the 10-year treasury yield went up, you can see the Russell 2000 also went up. When the yield came down, the Russell 2000 also came down. So now I point out that actually last week, it looks like the 10-year treasury was kind of in this downtrend. But there's a possibility if actually this 10-year treasury had a green week last week, and it continued this uptrend and broke this actually downtrend line, and there's a possibility for also the Russell 2000 kind of a follow suit. This is because when you actually look at the 2000 bear market was quite a major. You can see that it was in this downtrend, the 10-year treasury yield, but then at some point it broke out this downtrend line, and you can see the Russell 2000 just kind of follow suit, also kind of sharply increased. So this is where the breakout point. And it turns out that a week later, you can see like this was like a week before. Now this past week, the 10-year treasury yield had another green bar. You can see, so it looks like it's really kind of at the trend line. So if this 10-year treasury yield continue to increase, then the 10-year treasury yield is going to break out and break above this trend line. That could really suggest there's more upside ahead for the Russell 2000. actually the Russell 2000 could rally very sharply. And this information combined with actually the SP 500 is now kind of in a new bull market territory, could actually suggest more upside is ahead. And then this kind of reflects, and the investors kind of generally getting optimistic about the market, and this is also reflected in the dollar index. So from mid of April, you can see that for more than 1 month, the dollar index was on this new uptrend. Now it's around 104. It's actually getting close to the 105 level, and this momentum seems like has not slowed down at all. So this is the histogram, the MACD histogram. You can see it's firmly in the positive territory. So it could mean that actually more upside is ahead for the dollar index. And personally, I think there's a possibility for the dollar index to get to at least test this previous high and possibly go to the 110 level. So this is all kind of good, but now this is another information kind of on the sentiment side, not only kind of looking at the chart at all, but just look at the sentiment among the investors, especially the individual investors or investors just like you and me. We are the retail investors. So this is the sentiment survey conducted by American Association of Individual Investors. So you can check out this data on the website. And this is a weekly chart, all the way going back to 1987. And you can see that it really never kind of, this is the percentage of investors being bullish. It never get above the 80% level, nor it actually went below the 10% level. So this is the zone actually stays in. But you can see whenever it gets above the 50%, it's already considered very bullish. And when it's actually get to maybe below the 25%, and it's already getting very bearish. But look at what happened just in this bear market. We are actually extremely bearish, and this bearish has not really even changed much. So we are below 20% for quite some time, and then even now we are still kind of hovering around the 25% level. So in order to see this trend, I actually did a 20-week average, which is this lag curve, and you can kind of smooth out. You see the data. This is the 20-week average, and you can see that it's just around the 25% level of the investor being bullish. And you can see this kind of bearishness was not even seen during the sort of the 2000 bear market, or in the 2008 bear market. It was only kind of comparable to what happened in actually in the 80s. Here I think it's end of 1988. Here it's kind of early 1991. So if you actually now kind of compare this type of bearishness, which is okay, and then these two periods, and let's take a look actually what actually the market did during these two times. So we pull out the chart for both the SP 500 and the Russell 2000, and the Russell 2000 actually just kind of started in the towards the end of 1987, but you can already kind of see the pattern here. So this is late 1988, and what happened a year ago? That was a bear market, and then you can also see the famous October, Black Monday in 1987, where the market tumbled, more than 20% on a single day. So this was a very sharp bear market. And then, as you can see, since the low it made in the end of 1987, it started kind of recover. By the time that actually even in July of 1988, it's already kind of in a new bull market. It already kind of rallied more than 20% from the low. And at here, late 1988, it's already kind of in a new bull market, but it has not recovered all the lost ground yet. And the investment sentiment is very bearish. And it turns out this kind of bearish sentiment is not totally baseless. It turns out that you can see that this is when the next time when the investor sentiment is bearish again, very bearish again. But obviously, once the market made a new high, the investor turned bullish. But then shortly after, you can see that the market kind of tumbled again. So really kind of, you can see that the sentiment is actually can be used a contrarian signal to think about, you know, where the market will go next. So so bearishness, and actually the market is kind of continue to rise, and then when investors start to kind of turn bullish, it tumbled again. So now this bearishness is not totally baseless, as I just pointed out, because it turns out just a year later that the economy was in recession. So people probably were worrying about maybe a recession is coming, but when people worry about the recession, but the recession did not arrive a year later, so during that worrying period, actually the market kind of rise. So it really kind of like, you know, fits this famous line that the market usually rises, when investors are kind of suspicious. So whether a rally can continue, and yet it did continue. So, and this is a very shallow recession. The market did not really kind of like enter into a new bear market. And this is kind of also interesting to note, although the small caps acted differently because you can see it was down quite a lot. So you can see that the investment sentiment is very bearish, yet the market actually rallied. And because, you know, people are still kind of worried about, maybe bad things will happen. And indeed, actually bad things did happen, but that was like a year later, and that was a recession. But during that worrying period, actually the market continued to rise. And then obviously just kind of, you know, tanked again. So we don't know, you know, if actually this scenario really could replay, or maybe like, you know, Mark Twain said, you know, does not repeat itself. History does not really repeat itself, but it often kind of rhymes. So we will see what happened. And it's really kind of interesting to point out, to get these different views and think about all the possibilities the market could do. And so I hope you have enjoyed this video and find the information presented here kind of interesting. Again, you know, your support really means a lot to this channel, and give me the motivation really to continue make videos like this one. So please do not forget to click the like button. And also, if you have not subscribed to our channel, just smash the subscription button, and so that you can, you know, always kind of get the latest updates, you know, from this channel in a timely manner. And thank you for watching, and have a great weekend.